This is another episode of me documenting the day-to-day process that I am taking to achieve long-term consistency in the financial market. And this is another weekly review because it is what? It's Saturday. So what do we do as the best traders in the world on a Saturday? Well, the first thing you do is you get your ass up early and you get your weekly review done. That is mandatory. That is required. That is non-negotiable. Okay, if you're not reviewing your weeks, if you're not reviewing your months, and even your quarters, and even your years, how are you supposed to grow? How are you supposed to know what you're doing wrong and how are you supposed to know what you're doing right? It's just logic. It's common sense. This is what the best traders do. I'm sorry, but this is just what they do. And if you're not willing to do that, well, then you're not willing to be a good trader. So obviously I had a really large losing week, down $472. Last week I had a really good week. So it's kind of, the volatility of trading it's crazy. You know, you can have your best trading week on the eval and then the following week have your worst. That's how it is. That's just how it is. This shit is a roller coaster. It's extremely volatile. You can go up and you can go down, and your past performance is not typically indicative of future results if you are still trying to find your way in this game, if you're still trying to make it out, if you're still trying to achieve profitability. Now, eventually it just becomes like this, boom, 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 boom. And I'm trying to get to that point. But this week revealed a huge flaw that I have in myself, in my trading performance, that creates a week like this, down $472. And that's simply the tendency to hunt the move that has paid me the most recently. Now, if I put some context behind this, you can see this trade is a short, and the time that I took it was at 9:31. And look how much it paid, 120 points, 3 contracts, 3 micros, and it paid a lot. I was literally able to sell the low a day, and it happened right at 9:30. So it was a 9:30 sell, and you guys know I love taking those 9:30 sells, and it was successful. It worked. This was a really solid trade. It was basically 10 out of 10. Could not have been any better. So one tendency that I have that is holding me back is I tend to hunt the move that has paid me the most recently, meaning today, or this week, I went into the market 3 out of 4 days looking for that kind of move. So I had this really good 9:30 sell on Thursday. Now on the 8th, the 9th, and the 10th, I'm going into 3 trading days looking for this kind of move. Now it was valid to look for that move on the 9th. That's not a problem. And on the 8th, I guess it was too as well. On the 10th, though, it was not. The criteria was not there, and that was actually my largest losing day. So let's get into it. Not that. So this is TradeZella. The software that I'm using is TradeZella. All my systems, all my processes are integrated into one software. Everything is done in-house right here. It's extremely efficient. It's extremely organized. You got to be organized, and you got to know your stats. So the first thing that I do, baseline stats. Net P&L, that is an accident. The net P&L is not $1,000. It's actually, let's go to this week, negative $471.76. So that's an accident. Ignore that. If we go to R multiple, down 5R. So I basically gave back just about everything that I made last week, right? Over half of what I made last week, I gave it back. Wins-loss ratio 1.33 because I had one solid setup that would have paid $600, but I botched it, and we'll get into that. Trading days 4, trade 6, trade win percentage is 12.5. Day win 0, not one profitable day. So red flags, lots of drawdown. Why? What's going on? Well, I just got out of a 6-year relationship. It fell apart, and I had no drive to do anything. I was not me. My feel of the market was definitely distorted. Number 2, hunting the 9:30 sell in 3 out of 4 days when it only delivered on 1. My behavior is influenced by the big win that I had on Thursday. And then we also had a suboptimal condition with Tuesday and Wednesday where difficult reads overlapping the previous range, which is true. Now, positives, didn't really note much. Market approach, I had 2 out of 4 days incorrect, or 50%, and 2 out of 4 days correct. So the next thing that I do is, because I want to get extremely good at bias, because my trade model is wrapped around bias. I basically have to be correct about the direction of the daily candle if I want to put on a solid trade. Now, that doesn't mean I have to be correct about the direction of the daily candle in order to make money, because it's something called partials. You can pay the trader. It doesn't have to deliver the objective you're looking for, but it can deliver low-hanging fruit and give you some opportunity to pull equity out of that trade, and you can still walk away having a green day. You don't have to be right, but if I want to take a solid trade where I'm walking down basically the entire move, I do have to be correct. But my model is entirely centered around bias. So I have to get really good at bias, which I have been recently, My accuracy is probably around 70% after this week, because this week I got half the days correct, half the days incorrect. But if we look at previous weeks, it's definitely improving. Like I had one day where I was indecisive last week, and then 4 out of 5 days I was correct. And if we look at the previous week, I had 3 out of 4 correct. And if we look at the week before that, I had 4 out of 4 correct. So my bias is just, and then you can see right here, 3 out of 3 incorrect. So I made a change here, and now that's starting to show and reflect in the amount of days that I am getting my bias correct, which is translating to more profitable trading sessions, which is good. The thing is I'm having these days where I'm getting correct, but now I'm not able to capitalize on the move that I presented for that day. So that's another problem that I have to address at some later point in time. But the correct days that I had today was I was confident that the move on Wednesday was fake. I was not confident the move on Wednesday was real because of what it left behind. And if I go to, let's pull up, let's open another tab here so you can easily navigate. If we go to Thursday, let's go to Thursday's pre-market approach. Thursday, and we'll look at the annotations from Thursday, and I'll explain why I'm thinking the move on Wednesday was not real. If we go to a 15-minute time frame, I think it's better shown on the hourly. If we go to an hourly time frame, we can note all the smooth sell side that's left behind on Wednesday. And then if we go to Friday, I also annotate that there is, I believe I do. Here, this is better shown here. So if you look on the 4 hour, we have stacked daily lows. So Wednesday did not take Tuesday low, left all the sell side intact and traded up. And it also left a portion of the new week opening gap inefficient. So really, really strong reasons for the market to draw back down there. And for this reason, I'm not thinking that's the real move. I'm not confident that a low week is in. So that's what I was carrying the idea Thursday and Friday, which was good. That was correct. That's what the market actually ended up delivering. It offered a sell on Thursday and Friday. And on both of those days, I was not looking for higher prices despite the market being at all-time high, because I thought the move on Wednesday was not real because of what it left behind. So I'm still not looking for higher prices, believing the move on Wednesday is artificial because of what it left behind. So that's why I'm correct on bias on Thursday and Friday, but Tuesday and Wednesday, I'm incorrect. Now, Tuesday, let's think about it this way, okay? If you are making the market, if you are the market maker, it would be of your own benefit to make the traders in that market think that the market's going one way, while in reality you're trying to send it the other way so that you can generate liquidity to be the counterparty to your trade. So the first thought when I see Tuesday and I'm coming to the market, let's pull up Tuesday. And this highlights the mistake that I made right here. On the first thought, I'm saying this is insane strength and not thinking there's any reason for me to be a seller. It feels like avoid being a seller at all costs. So if we look at how Tuesday set up pre-market, we have this insane pre-market run. Here's the start of the pre-market session at around 7 o'clock, and the market just, boom, it runs right into previous daily high. This looks insanely strong. This looks strong. Everybody's looking at the market on Tuesday and thinking, okay, we just made a new all-time high. Look at what it did pre-market. This is really strong. We're going today bullish. So my first thought is this is really strong and it's bullish. And if everybody can see that the market is bullish and everybody can see that we're at the all-time high and we made this really strong move from London through pre-market and everybody's looking for higher prices, everybody's looking to be a buyer, what are they going to do with it? They're probably going to take it the exact opposite way. That's just how the market works. That's just how it works. Okay, if everybody can see something, it's 9 out of 10 times it's probably going to do the opposite of that because these markets are absolutely controlled and rigged and manipulated. So that's the reason I get the bias wrong on Tuesday, because if you look at my pre-market approach, like I said, first thought is, oh my God, this is so strong. This is insanely strong. So what do? They literally do the opposite. So I take 2 losing longs, attempting to trade that idea. Very small losing day, doesn't really matter. That's just a day where I actually get the bias incorrect. Now Wednesday, this is the thing. I can get the bias incorrect, and I end up bashing myself for it at the end of the session. But reviewing in hindsight, I was right about forming a bearish bias on Wednesday. There was a lot of reasons to go lower. It just left the consolidation range and went higher. If we look at Wednesday, not seeing many reasons for it to go higher, but several reasons for it to go lower. So I was valid in my bearish bias. It's for me, the move higher here just did not make sense. And it didn't make sense because it was basically manual intervention. They were just pricing this thing higher, leaving all this behind because they're setting the intention that they're going to use that level at some later point in time once they've made this manipulation move, because Wednesday was the fake move, right? Friday was the real move. Wednesday was the fake move. The fake move is not going to make sense because it's setting up the real move. It's that manipulation. It's that manual intervention. We're like, hey, we're going to take this shit. We're going to put it higher. This is what we're leaving behind. Everybody's going to think we're going higher now because this is extremely bullish, and it looks extremely bullish by the time we get to Friday. If we look at Friday, by the time we get to Friday, we see what Wednesday did. We see how Thursday rebalanced that and started to trade higher. Now everybody's thinking, oh, wow, this is extremely bullish. Look what Wednesday did. When Thursday traded down, rebalanced that. I'm looking for higher prices today. But look what it left behind. And that's why it's fake. So that's why Wednesday does not make any sense at all. I mean, if we're playing with a continuation of Tuesday, for me, it really, really made sense to see the market trade up into this gap, reject that, and trade lower, because we had all these lows down here, all the sell side left intact still. We did not take Tuesday's low, and we still had that portion of the new week opening gap that was inefficient. You see how it trades down here, but it doesn't close that in, right? So there's a tiny little portion inefficient. There's still no trading there. There's no trades booked there. The market will seek to rebalance that, make it efficient. So this is just manual intervention. This is just manipulation. And for me, I have no way of getting on side with this move. It just did not make sense to me at all. It's not algorithmic. It's not what I'm looking for. It's not how I trade. These are the days that I should be avoiding. But I ended up taking 2 losses on that day. Why? Because I was looking for the 930 sell. So I was right in holding a bearish bias. Nothing wrong about that. So a little breakdown of this week, a simple conclusion of this week, is the only day that I got bias incorrect was Tuesday. That's it. Wednesday's bearish bias was reasonable. I had a $600 trade on Thursday that I botched because I was not confidently in submission to the idea of lower prices for my plan. I still looked at the potential for higher prices, scared to be the contrarian. And then I left a $1,000 trade on the table because I destroyed myself chasing the 930 sell. So the thing that I struggle with the most this week is what I mentioned in the beginning of this video, is I have a strong tendency to hunt the move that paid me the most recently, which would be my bearish premium gap opening setup, or simply a move lower at 930 when the market breaks lower at 930. You guys know I really, really like to take those sells. That's my shit, because they're so sudden. They happen right at 930. I don't gotta wait for it, and they deliver like this. Boom, boom, boom. So nice. The best trades, the best trades. So I was extremely aggressive with my sell entries and taking shorts before the 1 minute range closes and I have confirmation, or before I have an inversion fair value gap or change in the state delivery, which led to 3 impulsive early entries. 4 impulsive trades. I had 4 impulsive trades this week where the sell was just extremely early before I ever even had any confirmation. So that would be on Wednesday, both the trades that I took on Wednesday, and then as well as the trades that I took on Friday. So if we go to, see, the start of this week was Tuesday for me, which was the 7th. So if you go to the 8th and I pull up these recordings and I show you guys these executions, well, they were really, really out of line. So first of all, let's look at this trade. This trade is taken at what, 928? I'm trading pre-market. I'm so confident in the idea of lower prices here that I am breaking my rule and I'm trading pre-market. And I'm also throwing this short on before I wait for the 1 minute close over this gap. I'm selling short when it's running through it. Now for me, the only time that I'm putting risk on before I wait for that 1 minute range to close and see how we've disrespected or respected PD arrays is if there's a change in the state delivery, because in order for you to change the state delivery, it doesn't have to close over the open price. It just has to cross it. But in this case, I'm selling short before the market has even shown that it's reversed or inversed this small inefficiency, because we still have 54 seconds on that 1 minute candle, meaning it could trade down and trade up and close as a bold face up close candle because it's still open, which is why it's extremely important to wait for those candles to close. I used to take a lot of losing trades earlier in my ICT journey because I would not wait for that candle to close. And how it actually closed did not indicate that we had an inversion fair value gap. So that's a mistake that I used to make, and I'm kind of making that now because I'm just so caught up in the idea of hunting these 930 sells, because that's what paid me the most recently last week. I had a really, really solid trade. See, what if it closes like this and it still indicates respect of that gap because the body's still closing within it. The wick does the damage. So this tells me that the order flow is still bullish. We're not going lower, right? But in this case, I'm throwing risk on before it even is closed over. Now, it does actually end up getting closed over, but still it's pre-market, and I don't trade pre-market. I have a rule that states I don't trade pre-market, and I traded pre-market here, and that led to a loss. So yes, the idea was confirmed after the fact. I threw the risk on early, sure, but it's pre-market and I don't trade pre-market. So this trade is impulsive, it's entry, it's early. And then if we go to the following trade for this session, again, at this point, I'm still just aggressively hunting that sell. Now it's 9:41, still in the first half hour market open. I'm looking at this gap here. I'm noting how we left the opening range gap inefficient here. We still have the smooth sell side below. Now, the fact that it just ran away from this and did not take any of this just sets up the probability that it's likely to come back there at some later point in time, which it did, right? So you got to keep these levels in mind. And then again, I never, ever, ever get a strong close over this buy side and sell side inefficiency. We never have a change in the state delivery. It never violates the open price of this consecutive series of up close candles. Like if I'm selling a high probability inversion fair value gap, I got to see some displacement, and it's got to be sudden, and it's got to be aggressive, and it's got to be large down close candles. This is not that. That is not displacement. Displacement is the measure of confirmation of a setup. The more displacement it shows me, the more confident I am in taking that setup. So in this case, it's another early trade. And I did good here because if I realize the full loss in this position, it's $106. Now, I knew that there was no premium sensitivity being shown at this small separation here or the inversion fair value gap. So I just take off, which is good. Just admit that you're wrong, close the position. And I would have realized the full loss if I didn't. So it just kept powering higher. That's that manual intervention, that manipulation move on Wednesday. And then if we go to Friday, these trades are abysmal. Like, these are absolutely horrendous. This is really, really bad. This is not how I trade at all. So 9:30 opens. I'm noting how we took the buy side here, pre-market buy side here. Again, still looking for that 9:30 sell, still looking for a break lower right at 9:30. But if we look at market criteria, which we will in a second, this was never, ever, ever valid for me to sell at 9:30 because the criteria was not there for me to even expect to break lower at 9:30. So we cross the candle's open price there, and I'm just now realizing it, but the change in the state delivery is not there because we have this consecutive series of up close candles. So the change in the state delivery would be there. So do we ever actually cross that open price? We still did, okay? But this is really early, and again, all I have to see is that open price violated, right? And I'm looking for a break lower at 9:30, so this would be the change in the state delivery, but the criteria is not there to anticipate that break lower at 9:30, so it doesn't work. So before this candle even closes, again, 40 seconds left on that 1 minute candle. This could flip and become an up close candle. Let's see how it ends up playing out. What happens? It flips and it becomes an up close candle. So it's extremely important to just wait, just like sit back and be patient and wait for that candle to close and really give you the confirmation, really show you that that trade idea is there. So again, still looking for that break lower at 9:30, and then look at this trade. This trade is just fucking stupid. Like if I'm being honest, I'm being completely honest with myself. This is crazy. So I'm noting relative equal lows left behind. Suspect. Dude, I mean, look at this. This is fucking ridiculous. This is not me. This is not how I trade. I'm selling short before first presentation is even ever inversed. Just throwing risk on. Let's just sell it short. Like, what the fuck? I never do this. So, obviously not on my A game at all this week. I took a lot of trades that I would never, ever, 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 ever take before. I'm trading pre-market. I'm taking a lot of impulsive sells, very, very early, very, very aggressive trades. So mistakes that I made this week, many aggressive sells taken impulsively before I ever had confirmation looking for the break lower at 9:30. So I went into 3 out of 4 trading days this week looking for that break lower at 9:30. If we look at basically every approach that I had today, right? Stay heavy at 9:30, so I'm looking for that break lower at 9:30. If we look at Thursday, early into the open, so I'm looking for a sell early into the open, which did play out, and it was there, and I caught it. I just fucked that trade too. And then breaks lower at 9:30. So 3 out of 4 days I'm looking for this shit, and only 1 out of those 3 days it delivered. But if I would caught the day where it did deliver on 1 out of 3 days, that literally would have funded this entire week, and I wouldn't even have to trade on Friday. So let's look at the trade that I botched on Thursday. There's so many different ways that you can fuck yourself. There really is. That's how trading is. Like, there's so many different ways that you can fuck yourself. So you can see that on my trade plan, right? This is Wednesday. Let's go to Thursday. That's Friday. Let's go to Thursday. There we go. I'm looking to sell the market if it can break down from this pre-market range and create a slide against sell side early into the open. Because if we look at how the market is setting up, this is a criteria where I can anticipate a break lower at 930. Why? Because we've cleared previous day high. We have this balanced price range, so the price action here is isolated. New bearish order flow formed and it is respected. We have low resistance sell side looking left, looking inside the previous day range. There's nothing in here for the market to grab onto except this and this. So it's going to seek to rebalance that. This market moves from inefficiency to inefficiency, liquidity to liquidity, liquidity to inefficiency, and efficiency to liquidity. So if we open up here, high in a premium, and we have taken previous daily high, we have a balanced price range here, indicating that this price action is now isolated, should not need to go back to that high because, boom, this is going to act like a brick wall, keep price down. We have new bearish order flow created, looking left inside previous day range, low resistance sell side. And now pre-market, look how we're setting up, where we have this really, really clean, really smooth edge setting up. Low resistance sell side. I just want to see a break lower down out of that. On the first 5-minute candle, be a large down close candle, confirm that break lower. That's it. And I get that. But again, I messed it up. So sitting here on the screen waiting, because I'm looking for that break lower at 930, right? So we have a large down candle there. So now I'm noting the formation of first presentation. I'm getting my sell limit order ready because I'm noting, okay, this is starting to warm up to me. Now it's 9:34. I'm just waiting for that first 5-minute close. Now notice how when I'm just sitting back and I'm just patient and I'm waiting for the first 5-minute close, that I'm actually able to catch the move that I'm looking for. Now compare that to Wednesday and Friday, where I'm just, boom, it's like, just get in there, just sell it, just make it happen, just make it happen. Then what happens? I hurt myself really, really fast, really, really easily. So I'm not going to blame all the mistakes that I made on the fact that I just got out of a 6-year relationship and my girlfriend broke up with me, but it definitely weighed me down 100%. Like, I was not myself this week at all. I was not the trader that I was the previous week when I had a really good week. Not the same trader at all. I was doing a lot of things that I never do. So now I'm just waiting for confirmation that the market is breaking lower out of first presentation. See, in this case, I'm waiting for the close of this candle to confirm that this is a bearish order block, because for me to confirm a bearish order block, it has to indicate respect of premium array, which in this case it does, because it trades up to this, does not even trade to the midpoint, and then closes below it. That's a sign of weakness. But here I'm not just aggressively selling short on the violation of the open price there. I'm going to wait and see how this candle closes, because again, there's 30 seconds left on that range and it could flip bullish, which it does. And then I get the change in state delivery. Then I really know I have the change in state delivery because we failed to trade a consequent encroachment. And now we have this large displacement coming in, violates the open price of the consecutive series of up-close candles. That's a sell. Boom. Stop loss is going to go at the high of first presentation. Does not have to go to candle 2 because I know this gap is likely to stay open based on my 930 sells and all the times that I have executed 930 sells. This is typically what happens. It typically leaves first presentation open. It's part of my stop management rules as well. And my limit buy order is going to be inside previous day range. The only area where I think the market could potentially reverse. Now what happens? I'm not very confident this is going to deliver. I'm trading counter trend. The market's at all-time highs. Looking at what Wednesday did on Thursday, it's kind of scary fading that, right? Because that move on Wednesday was just so strong and so one-sided. It just went. No retracements. It just went. So now I'm directly trading against that right here. Not 100% confident in the market delivering this level down here, so I book a partial there. If you're scared about whether the market's going to deliver your objective or not, and you're really anxious about that idea, the best thing that you can do is just book a partial. Just book profit, lock in some equity. That alleviates the anxiety that you feel with the position. And then what happens? Boom, large sudden displacement comes back inside the range, and I'm thinking, okay, the sell idea is done. We're not going lower. We're still going higher. So what do? I switch my bias intraday, and I flatten all in a reverse position, and that leads to a loss. Now, had I literally done nothing, $600 of potential profit if I did nothing. But I flipped my bias, stopped out on that, gave everything that I made back in the win. And then from there, I was like, okay, that's it. That's a session. So walked away, break even. And then Friday, you know what happened. Those abysmal trades, extremely ugly, just things that I don't do. So, how did I have the worst trading week following the best trading week? I have a strong tendency to hunt the move that paid me most recently. Strong tendency to hunt the move that paid me the most recently, which is typically my bearish premium gap opening setup. I traded for that move 3 out of 4 days this week, looking for a break lower at 930. The same tendency I experienced after August 15th and 16th. So I've literally made this mistake in the past before, where I had really, really solid sells at 930, and then I go into the following trading days looking for those again. And then, again, I was extremely aggressive and early with my sell entries, taking shorts before the 1 minute range closes and confirms I have a IFVG or CISD, which led to 3 impulsive early entries, 4 impulsive trades. 4 losses taken this week because I'm really, really hunting that 930 sell, and I'm executing on it before I even ever had confirmation. That's big. That's a heavy mistake, extremely heavy mistake. And then, of course, carrying the external situation into the market. My boat got rocked when my girlfriend broke up with me. I had no drive to trade, and it consumed my mind. This week, I was not the same trader I was previously. The way I read the market was different. I felt different, and this made trading 10 times harder. I definitely carried the weight of that event to the market, and the decisions I made reflected that. I did multiple things I never do, like trading pre-market and reversing my position. Twice, I was so close to violating my max trade rule and taking a third trade, but barely maintained the discipline to stay solid. So, actionable steps moving forward now. Well, now that I'm aware of the tendency to hunt the 930 sell, I don't think I'm going to be able to fall into that same mistake again, because now I'll go into that session thinking, okay, look, this is what killed me last week. I'm hunting the sell at 930. Now that I'm aware of it, I believe that going into next week, I'm going to be more patient, more disciplined, more selective with my entries, and the ones that I take, not extremely aggressive and just executing them on any little sudden down move that I see. And aside from that, that's basically what killed me this week. There's one thing. Sometimes when I'm trying to figure out where I went wrong in the week, it's not really clear to me. But this week, it was extremely, extremely clear. Like, I was really, really looking for those 930 sells, which was valid on 2 out of 3 days. It was not valid on Friday. But still, on the days Wednesday and Friday, I'm taking trades where I never even had confirmation, or I'm trading pre-market when I should never be trading pre-market. So even if I did get the bias correct and the market did go lower that trading session, I didn't give myself the opportunity to execute it on Friday because I was too busy trying to sell that shit early into the open at 9:30. And then on Wednesday, it was never ever confirmed, and I'm still selling short twice on Wednesday. So 4 losing trades taken for that reason. I took 8 trades this week. Damn. 4 out of 7 losses taken for that reason this week. And there you go. That's it. So that's the main reason I had drawdown this week. That's the reasons that I struggled. That's going to be it for this weekly review. Thanks for tuning in. If you watch the end of the video, let me know in the comments. Drop a comment because I answer all of them. You know I reply to all of them. And I appreciate you guys, the ones that were consistently watching these videos and supporting the journey. Really do appreciate it. And I will talk to you guys possibly tomorrow with maybe a request from one of the videos I was asked to make in the comments. See if I can fulfill that. Or maybe even a live stream. Let me know if you would like a live stream. Probably drop a post, a poll on that. And then Monday and Tuesday, let's look at next week. Moving forward. Monday and Tuesday, no drivers. And then we have... Oh shit, that's this week. Whoops. Okay, we have a holiday on Monday, so not trading that. Powell event after a holiday on Tuesday. Not trading that. And then Wednesday, finally, looks like a trading day for me. So, probably going to start trading on Wednesday of next week. Monday and Tuesday, maybe I'll do a live stream or some shit. Make different kinds of videos. And we'll go from there. So, again, I appreciate you for watching. Appreciate you for subscribing to the channel. And I'll talk to you guys tomorrow. And Monday and Tuesday.